Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with the one and only Bob Iacchino, who is here today. So, as always, I'm going to have to make some modifications. Add me, add Bob. Let's just get to our charts. We're just going to. There we go, in the corner again. Ah,
Gotta move my camera, or you gotta move your. There we go.
well, you could. We just want to see half your face.
Was I
Half.
prepared for the sell-off? Yes.
All right, let's see who's here. Let's see. Tesla Force is here. Thank you, Rich, with the joke. I wonder why they called him Putin with a put. That's a good one. There we go.
That is a good
Hey,
one.
Mike and Bob. Bob, before I get one, ask Bob, so you can answer this in a bit, Bob, about the Fed's reverse nightly repo activity at all-time highs. Can you explain that a bit?
Say that again.
The reverse repos being at all-time highs. The Fed's reverse repos.
Yeah, that's basically a liquidity issue. So reverse repos, we all know what. Well, we probably don't all know what reverse repos are. Reverse repos essentially is money that the Fed gives back to banks and pays them an interest rate on it. It's a repurchase agreement, basically. Um, so when there are all times highs like this, it's starting to lean toward the possibility of credit not being available. So it means liquidity for banks is not necessarily available. And that's an issue the Fed will look at. When they're at all time highs like this, the Fed generally adds liquidity, and right now they're talking about taking it away. So it's a bit of a quandary for the Fed. They got to find a way to add liquidity. The last time this happened was the end of the year, early December of last year, and the Fed just injected money directly into the system rather than doing this sort of monetary policy adjustment. So it is really something to look at now, but it is potentially a sign that credit markets are getting a little tight. I don't know if that made sense to you guys or not.
Well, that's a good explanation for me. And by the way, if you want more wonderful explanations like Bob just gave, please do consider subscribing, ringing that bell, and hitting the like button. Had to disappear Bob for 1 minute after that. Amazing, amazing explanation. Hi, Sashi. Good afternoon. Mike and Bob says, and so goes the market. Oh boy, we've had all these doubles too. Good afternoon, everyone. Glad I've been sitting out these last 2 weeks. It's been getting a little antsy. W browser, was I prepared for the sell-off? Yes. Still have the same amount of popsicle sticks and twine as before. Can't find anyone who wants to trade them. Oh well. Hey, Jake the Snake. Here, Jake chimes in. The 1 hour double tops were a thing of beauty today. We went over those. We went over the double patterns this morning, and those kicked in on momentum bars, and then it was all she wrote. And Sterling just says, "Ouch." So, by the way, existing home sales tomorrow morning. Consumer board leading index, and then we have three Fed speakers going on, and there's another one going on in a few minutes. Mester's speaking. Then you have Waller, Williams, and Brainerd tomorrow, and you had the Bullard in the China shop today. Again, do you have any comments on Bullard's? What Bullard had to say, Bob?
I would say this: if you all remember, a while back, Bullard was the biggest dove, and he was making comments about how the Fed needed to do more, keep the economy going, et cetera. He was one of the bigger doves, and it didn't change Fed policy. So now the fact that he's one of the bigger hawks, I would just keep that in mind. He's not going to change Fed policy with his comments. Certainly, you can see by the Fed watch tool there, it didn't change it much today.
Yeah, it's been. I mean, we've been slowly dropping back to just favoring that 25 basis point. By the way, the heat map today, ugly. Although
I think
Walmart,
Bullard likes seeing his face on TV.
uh, we'll take a look at some of these during the stock segment, but Walmart, we had that double bottom little play, double bottom in Walmart, but everything else, yeah, the consumer staples again, pretty strong and hanging in there. And here's the doubles that we were looking at. Again, let me expand this. Now you had to trade these with momentum bars pretty much, but here's Here's that double top we had this morning in the S&P. We had really nice momentum bars off the open. You can see here these real nice momentum bars cascading down, then actually returning to here's the point that we were watching for the trigger, this 44.22.75 area, and then giving you a beautiful re-entry coming back up to that level and then just cascading down the rest of the day. First target hit, second target hit, then actually we had a harmonic in there before the third target. So we still have this 43, 62, 50, but plenty of opportunity to ratchet down. Remember, we were just into the wicks here, so the first and second targets were the highest probability ones. Still watching for the lower price action. And what does this mean for bigger picture? We're still with the double within a double. So we start breaking back down below about this 43.50 area. Then we're watching 43.28, 42.91. Any takes on the S&P, Bob, or any of this price action?
Yeah, read Shashi's comment there about Putin is going to wage war. Put that one up.
Where where is that? Oh, here we go. Putin is going to wage a war. No, he's not going to occupy. No one knows when this will end. The market went up 10% in a week after Putin occupied Crimea.
All
Crimea.
right. So, couple of things. First of all, the 2-day rally we had in the S&P before today didn't even fully recover the 2-day drop we had the prior two.
The three
I
day.
don't three. Well, not even the two, right? But yeah, the 3-day drop. It seems a little optimistic to want a 2-day rally to recover a 3-day drop. So I'm just going 2 to 2 here, and it didn't even recover that. What you see happening here in equities right now is the guys have their fingers on the sell button, okay? And any little bit of news hits that sell button. Mike and I have been saying for a while, I've been saying since I started being regularly on the live stream, that the selling's not over. And you could tell from activities like that. We spent 2 days closed below the 200-day moving average and then 2 days closed above it. Those 2 days closed below it were a lot more convincing. The reason I wanted Shashi's comment up there is because they're using a Putin invasion doesn't really affect U.S. equities in any real way. He hasn't even threatened to cut crude oil production. He hasn't. Iran, we're close to a nuclear deal with Iran, which means another 500,000 legal barrels of crude oil coming onto the market if that happens. I say legal barrels because they're already selling about 1.8 million illegally. I don't even really like using illegal because it's not illegal. It's against U.S. sanctions, right? But not only will they be able to immediately dump another 500,000 barrels a day on the markets, but they'll be able to take investment to ratchet up their supposed 2.5 million, 2.3, 2.5 million barrel a day potential to even higher than that. Putin can't cut crude oil that much because he would cripple his own economy. So I don't personally think an invasion of the Ukraine, as Shashi said there, after he occupied Crimea, the market went up 10 points. I don't think it has that much to do with it. I think it's the general sentiment and nervousness in the market overall. We noticed gold spike today. We noticed yields fell today. That was all flight to safety based on the potential for an invasion because that's going to affect U.S. equities. How? I don't really know. So just understand what the market is telling you here. There's a definite underpinning of selling equities, not just buying dips. That's what this is telling you.
Christoph, good afternoon. This type of price action is exhausting. It's definitely
Well,
not as fun as the straight up bull market.
no, it's not. But
Sterling's still long on tulips though, so that's a good thing. Kathy had that wonderful interview on TV today, talking about her portfolio. Still, what was it like? Deep value, and did she buy more of Roblox?
she did.
Oh boy,
She bought another 50 million shares, according to one report of Roblox. Um, she was talking about her belief today, and I'm sure, Rich, you saw the same interview I did. I didn't watch the whole thing. She was talking about her belief in innovation. And it was just really funny because Josh Brown, who I actually don't like as a person, kind of called her out and said, you talk about your fund being innovation, but then you own DraftKings. That's a bookie. It's not innovative, right? I thought that was a really good comment. Although he complimented her at the same time. He's like, I think you're great. I have a lot of respect for your research. Roblox is one of those, like, they're obviously a leader in the metaverse. She talked about the commercial ability of the metaverse and how Roblox, over the last quarter, their user base above the age of 16 grew. I don't know if I don't know how much it grew. I think Roblox is going to struggle simply because of the reopening of the economy and that sort of face to face thing that a lot of people have been clamoring about during the pandemic. So I think, honestly, I think 10 years from now, if ARK survives, it's going to be one of these funds that has made a lot of money, but very similar to some crypto. It's going to be an awfully just brutal ride. If you got a weak stomach, you don't even want to look at ARK.
With that, well, I'm going to call up Arc because it had a little great sell breakdown signal tonight from the or today from this flag. Watching for this to head back down to the lows, but Sashi again is all started to fall after Kathy interview. I don't think she had much to do with the falling, and I love the part with her interview where her Zoom time ran up because she doesn't have the paid account, and that's one of her holdings, and you don't even pay for your. I'm sorry, that was
She
funny.
Well, she talked specifically about Zoom as well, saying that, of course, Zoom was going to do well during the pandemic. She said, but the pandemic proved the innovation of Zoom and how it's going to be valuable going forward. And the growth is going to be slower now, but it's now a staple in a lot of businesses. I don't honestly know that. I disagree with her on that. But there's going to be a period of time where that stuff doesn't go away, but gets put on the shelf. You know, it's like a meal you've had too much of. It's like, yeah, don't make the mac and cheese again. We ate that for 2 weeks straight. Let's still buy it and keep it in the cupboard, but let's not use it.
Josh wants to know if it's March yet. And that's going to play out. Is that going to be better or worse for the markets? Let's
What,
see.
March?
Roblox down 11% during market and 9% after market. Oh, Kathy,
Hey,
Kathy,
we know
Kathy.
the February and March thing, right?
What was that?
If January is down and February is down, the probability of the year being up drops dramatically. Now, I don't remember what the probabilities are. The January effect is that if January is down, the market is up 67% of the time instead of 87% of the time. Still, obviously, way in favor of the up finish for the year. But also, 9 out of the last 10 years where January was down, the market ended up. So there's your Fed effect, right? But January and February, not necessarily the case. It goes down to like 51% or 53%. Don't quote me on the percentages. But if January and February both finish down, it's difficult for the market. It's not as easy for the market to finish up as it normally does.
Well, based off, I have Nasdaq up there now. Just based off our short-term probabilities, again, we closed below that 62.5% level, which favors a retest of the lows. We're back below it today just because we bounced above it. Did not change the probabilities, so you could not get back above the rotation zone, triggering also that 1 hour double. Hold on, there we go. That 1 hour double top we highlighted on the market preview today, and almost hitting all three targets on the way down. Again, same thing with this, just breaking with momentum bars. Here we go. Breaking with momentum bars, coming back up. Another little mini double within the bigger double, then just bleeding out the rest of the day. So that's, again, watching still for a retest of this low area with over the next few days. Next key support is about 13,900. That's the next major support. Next minor support is 14,025. And then remember, we're within this bigger double top, which I'm still using the targets, even though it slices through these wicks. The next major targets for that bigger double top is 13,850. And then it would just be, I'm just targeting the most recent lows from the 24th of January. Let's see what else we have. Warren Buffett invests $1 billion in Bitcoin friendly neo bank, dumps Visa and MasterCard stocks. Sorry, new bank. Uh,
Hmm.
so yeah, I saw something about that. I don't have many comments. I don't think Visa and Mastercard are going anywhere anytime soon. Any thoughts on that, Bob?
Which Visa and Mastercard versus Bitcoin, or just in
Verse,
general?
Buffett putting stuff in
No.
new
Hey,
bank.
Buffett's had some recent losers. I don't put it. Bitcoin has to have a come to Jesus moment, and they haven't had it yet. And that's Tether, and it's some of the frauds and some of the theft going on in there. I believe Bitcoin. I used to say that I knew there was going to be a cryptocurrency that was going to make it. I just didn't know if Bitcoin was Facebook or MySpace. I now believe Bitcoin is Facebook, Meta, and but what I don't know is there's still one more washout of Bitcoin coming with the Tether fiasco and with regulations. And there was almost an executive order on regulations that came out. There's a dispute between the Biden administration and Treasury as to what it should include. So we don't know what that's going to look like. So I like Bitcoin long term, but there's going to be there's going to be some problems at Bitcoin that then we have to relook at it then. I wanted to mention before, because I'm going to have a hard stop a little earlier than normal, but I'm a Consumer Reports subscriber, right?
Yep.
And guess where Tesla has fallen to on this?
Where?
23rd out of 32 now. Tesla's now 23rd out of 32 cars tested in Consumer Reports customer satisfaction. Weren't
Well,
they one for a while?
Well, they were pumped by Consumer Reports for a while, but the Consumer Reports has been more and more bearish on them. By the way, crypto I have up here right now. This is a double top that's triggering on the longer term bases, and I said I was short term bullish, longer term bearish, and this would be triggering the bearish patterns again. 39,427, about 38,382, then 37,285. Then, if I think gets momentum, we're going back to retest these most recent lows. Ethereum also double top that is not triggered yet, but that's 2645, 2553, 2461. So, and I'm really bearish on these longer terms until we get that flush out in a lot of the stable coins, which Bob was referring to. And I've been harping on. How long have I been talking about Tether?
Long, long time, at least 2 years.
I've been talking about that unbacked issuing of tethers and just flipping the money back and forth to pass their. They don't even get audits done. They have what the attestations.
Mm-hmm.
Not even audits, just attestations, which means they just get to take the money from their trading platform and they shift it into bank accounts because it's the same firm. Essentially, it's the same
Yeah.
guy. So they just flip it back and forth depending on where they need the money. And oh, look, they're backed. And then 10 minutes later, it's not backed at all because we moved it back into another account.
Like, I
So,
just don't know what their end game is with that shit. It's like either you have it and you get an audit, or eventually someone finds out and you get completely crushed. But it just seems to me like, look, we've heard time and time again about executives and criminals and things like that getting prosecuted, serving their time, and then coming out and they're still rich. This is likely what's going to happen to the Tether guys.
yep. Gold is still alive. Gold is again hit the neck. What 1907? We had that harmonica even on this morning. 1907, 10. What was the high so far? 1906, 60. I'm watching. There should be some pretty decent resistance up around this 1915 level. Then I'm watching for a pullback to potentially reload. Remember, though, we are in a major still consolidation. It's got a lot to work through, so I mean we're long term bullish on gold. At least I'm very long term bullish, but I expect again some retracements back down. What else do we had?
Hey, real quick on gold.
Sure.
There's seasonality in play in January and February. When you're looking at commodities, you should always be aware of seasonality. And seasonality is by no means a trading strategy, but one of the sharpest seasonal periods for gold and silver is January, and it's followed up by a steep yet upward sloping seasonality in February, and that ends next week. Now it's about 30 years of seasonal data. Now, again, it's not a trading strategy at all. Market could go in a completely different direction than the seasonality. So I always look at it as a headwind or a tailwind. So that tailwind for gold and silver is going to end sometime next week, seasonal tailwind.
And we're actually with a lot of stuff I follow. We're approaching some sell signals now. These would not be sell short signals. These would be sells to take some profits and lock something in, and then watch for the next pullback. So that's pretty much Sashi. Fed's Bullard still favors 100 basis points. You already sort of alluded to this. Rate hikes by June. Fed tool
Yeah.
shows 25 basis point math don't add up.
Yeah, Bill Bullard is not. He's not going to influence Fed policy. I honestly believe he just likes to see himself on TV, because he was one of the more dovish Fed members when they were after the hikes between 2015 and 2019. He was the one who kept coming out saying we got to cut and we got to do more QE, and he didn't really influence them then either. He's not going to influence them now.
Just have the Dow up here. Remember, we did not have a short term double top here. It was just breaking down below this 34,619 area, and then just running back down. The next support area I was watching was this 34,277, which were on the charts this morning. And the bigger perspective, remember, we triggered the double top in the Dow also. We bounced off that first target back on the Valentine's Day. 1 day rally, and then 2 day rollover. We're back at that target. Next major target's down 33. I just go essentially off 34,000. Well, we know it's 33,990, 80 something, so 34,000. And then the next target is 33,715. Also, a close below the lowest close so far in the last couple months was this December close. We get a close below that. That's also a trigger for a number of longer term system sell signals that I follow. So that will kick in even more sell signals, and that doesn't mean everything has to go straight down, but that means that's a pretty major key level I will be watching. And that key close, just for anybody who wants to track it, is 34,002. So you get back, if you mean any close below 34,000 triggers it. Let's see. Bob, I know you're knowledgeable on copper. Do you see it moving out of its big horizontal channel anytime soon?
I do, actually. I think it's going to move up. Again, fundamentally, the chart isn't really strong, but it's certainly not a bearish chart. China has there's zero COVID policy, and it's stupid because nobody can be zero COVID now. But I suspect that they did it for the Olympics. The Olympics end this week. I suspect at some point they're going to announce that they're not doing zero COVID anymore, and that'll help because part of the slowdown in China is because of the zero COVID policy, and China is obviously the biggest purchaser, user, smelter of copper. The second thing is March, April. This is kind of funny, but March, April is strike season for copper mining. Over the last 2 years, we've kind of been like not immune. It hasn't affected the markets because mines have been closing because of COVID outbreaks anyway. So there's nothing really to strike over. Mines were shutting down to try and contain the virus in those countries, Chile being one of the main ones. This year, we're likely to see a pretty heavy strike season. And whenever a large mine threatens a strike or goes on strike, you get a spike because it's obviously a supply restriction, so it's supply and demand. I suspect we're going to see that this year. So, yeah, I would expect sometime in March, April, you'll start to see it break out.
Sterling, wouldn't pretty much all the commodities rise if Russia doesn't invade, especially the ones that are shortages of already?
Yeah, I mean, but it would be short lived in my opinion, because look, we're not going to war with Russia over the Ukraine. We're not. So I think it'd be very similar to Crimea, where there'd be some threats, there'd be some sanctions, and then it would just all kind of calm down from there. We don't get a ton of commodities from Russia. Some of the rare earth, and again, Russia is would be slitting its own throat to cut too much crude production. But yeah, if there's an invasion, you'll see crude spike. You'll likely see gold and silver spike more though.
And crude, I've been talking for a while about the bigger pullback, and we're sitting there again at the bottom of the daily rotation zone. Rotation would have to get above 91.70 to confirm that a short term bottom's put in. If it breaks below today's low, I am still watching a pullback towards the weekly rotation zone for a major reload pattern. Uh, let's see. Tesla Force S&P seasonality for a midterm election year, Bob?
Weak then strong. That's what usually happens. Usually get weakness going into the midterms and then strong coming out. A lot of that has to do with the traditional switch in party control at a midterm. That usually happens. Like I know Republicans are all, there's gonna be a red wave. Well, it usually is. There usually always is a switch from the president's party to the other party. And that generally there's weakness going into it simply because legislation just completely grinds to a halt. And a lot of the times there are rallies based upon things that a president says he's going to do and then can't get done. Like I think Build Back Better sucks as a plan. Obviously, I haven't read the whole 1,200-page thing, but um, a lot of the money that's going out for infrastructure will probably be stalled. So there's general seasonal terms of that is weakness before and then strength coming out.
Oil prices hit the 2008 highs and retest 140. Your opinion on this, please.
I don't think so. So first of all, Goldman Sachs and I think JP Morgan both have over $100, could be Morgan Stanley, I don't remember, but both have over $100 average price targets for 2022. I don't buy that at all. We talked about this in the last live stream. Crude oil has a characteristic to it. It goes in big sideways channels. I think we're entering one of those channels now. Wherever Mike's got that support, I see it on the chart. I think it's somewhere around 80, 82. That's likely to be the lower end of the channel, and probably up above 100 is the higher end of it. And it'll tighten up and tighten up and tighten up as supply and demand becomes more clear. But I think we will get spikes above 100. I do. Iranian nuclear deal fails. That's probably a spike above 100. Russia invades. That's probably a spike above 100. So I think those will happen. I just think the average price of $105 is tough because then, Shashi, that's when we hit one. We have to hit 130, 140 to get that. So no, I don't think we'll see it, but these things can change pretty quickly.
Christoph's chiming in. Ukraine is a significant exporter of eggs, oilseeds, sunflower, and canola.
Yeah, I mean, not to us, but yes. But again, an invasion doesn't mean that the Ukraine can't export these things, right? One of their problems was one of their main ports was Crimea. So they got that sorted out. I don't know this for a fact, but I suspect that their nearest largest port is as far as they can get away from the Russian border in the Crimea area as possible. They didn't do that. They're dumb. But again, I'm not looking at a map, so I'm not sure where that is.
Quick question. Any other thoughts on notes? I'm watching for this little double to trigger and then a bigger retracement. Was this with the market sell off because we were already prepared for watching at least a short term bottom put in place? Is this just people parking their money in some safer instruments like
Yeah, I mean
treasuries?
the reason we know this was flight to safety was because treasuries rallied and gold rallied. And Bitcoin did not. So this was all about the Russia Ukraine, this rally. Yeah, I suspect it could. I mean, I don't know who to believe about the Russia Ukraine situation. The Germans said they're pulling back. Russia says they're pulling back. U.S. says, the same satellites they used to find the WMDs show that Russia's building troops up again. I don't fricking know. So, I mean, that's why we look at charts, right? I suspect that double will break and it'll probably get to its target.
Any thoughts, dollar index or anything? The dollar, I
Dollar
mean.
weakened. Yeah. It's funny because, again, dollar weakened on the idea that an invasion by Russia takes $50, 50 basis points off the table, which we saw in the Fed watch tool that it went from 60% to 52%. What was it at, Mike? Around high 30% now when you just checked it?
Yeah, hold on. Yeah, let me. We're at 30, essentially 33%.
All right. So that's why the dollar weakened. So again, that's all just relative. I mean, I think the dollar is going to be stronger by year end. But again, the ECB seems to be switching to me. They seem to be leaning the other way. I think Russia, Ukraine would change all of that. And I don't know who to believe with that. So,
Until then, it seems like it's almost day to day. Whatever scrolling across the newsfeed headlines are gonna, especially this back and forth market conditions. Until we really break this critical support. I mean, looking at things longer term, weekly charts. We start breaking down on the S&P below about 4,300, 4335 area, then I think you can get some acceleration to the downside regardless of the minute by minute headlines. Nasdaq really needs to get back below the most recent lows. Then I'm targeting about 13,003, and the Dow I've already given my key areas at 34,000. You got to close below that, triggering a bunch of long-term signals for more continued weakness. So that's where we stand. Where's the support on SPY and uh, you want the S&P or the spiders? Uh, on the S&P, again, here's the weekly chart. Weekly major support is right at about 43.33. Okay, that's going to be major weekly support. You start breaking below that. Daily support is coming in for me about 4,300. We start getting daily closes below 4,300, not very good. That's the very key area I'm watching. You see every dip below that when we had that earlier sell off was bought at the end of the day. The dips below that before back in October were bought. We start getting closing below that level. Uh, that is not good. NASDAQ, again, the key area I'm watching is about 13,900 on for a daily basis. We get closing below that will not be good for the Nasdaq, and the weekly. All my key support was already broken, so now I'm just watching that daily support. Now, longer term support for the Nasdaq, as I said, is coming in about 13,300. Uh, what what is the time frame? April? What in reference to? I need to more clarify on that. Shopify is still overvalued even despite its recent drop. Yeah, a lot of things are still overvalued despite the recent drop. Was surprised the VIX didn't go up today. Where's the VIX? I didn't look at the end of the day. 2810. Uh, it's
when
not
enough.
out of control yet, but
Yeah.
above this 2030 area keeps it in more of the teetering back and forth. It's definitely favoring some risk off, Bob. Risk off.
Oh, stop.
I pay attention if we start getting above about 29 again. We start getting above 29 with some momentum. I will expect to see a lot more downside pressure. So, anything else you want to say before we wrap this up today?
No, I'm good. Oh, I did want to talk about retail sales yesterday. Just real quick. Retail sales, keep in mind, retail sales is a value measurement, not a volume measurement. So, as strong as retail sales was, part of it was price increases. So, keep that in mind. Retail sales measures the total dollar amount of goods sold. Now, you go across retail sales, you look at the back of the data and all that, there was a lot of shit sold. Okay. But part of the rise in that was definitely due to inflation and not as much, not as much spending. And the second thing I would point out to within that context is that means people are buying higher priced goods. And we already discussed that wages are not keeping up with inflation. So what does that tell you? That their savings is starting to dip. And Mike, I sent you a chart the other day. I don't know if it was this morning or yesterday. The
Yeah, I
savings
put
rate
that up for
almost
everybody yesterday.
okay. The savings rate is almost back to pre-pandemic levels after having spiked when the economy was basically closed down and they were sending out stimulus checks that you could only spend on Amazon and DoorDash, right? So the savings is being spent, and that's probably not the best thing to hear about for the economy overall. So that's something I remembered I wanted to say.
Yep. I'm just going to take a look at this XLE. I'm still really in bullish mode, but again, also Rich watching for this pullback. The key pullback area I'm focusing on is about 65.50. Uh, right there. It's already hit the bottom of the daily rotation zone, bounced back up. But again, I'm watching that 65.50, which is right in here on the daily. You can see right around there. You can even start seeing if we can even get back to about 66.40. Right in this window, I'll start watching for another rotation back up and a re-entry pattern. But this is in major bullish mode still for even on pullbacks are still to be bought from all my technical analysis. All right. Thank you, everyone. Thank you, Bob, for being here again. We will let you go. I will be back on in about 15, 20 minutes, and we can go over. I know there's some other stock stuff put in here. We'll take a look at Roku. Uh, let's just do a quick little peek. Oh, for the plug that, oh, Roku. Wah, 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 wah. By the way, and you want to see this is look at this. Look at what was this, Bob? Can you see my chart on Roku on the weekly?
Oh
Double
yeah,
top.
double top with a little double bottom in the middle of it.
Yeah, and then look, we've already hit the first target. We're well on the
Mhm.
way now to the next target, which is 111, 112 area. So I'm expecting to see that over the next few weeks. But this is what a thing of beauty. This gave amazing opportunities to the downside with that triggering. So we will again keep talking about that in the stock overview coming up in about 15, 20 minutes. Until then, thank you, Bob, for being part of this as always and spending your very valuable time with us. And why are you laughing? You know my time's worth 2 cents. Your
Don't forget to
time.
mention number 23 on 32 for the company stock that shall be unnamed that makes an electric car.
And we will talk about the company or not shall be named in his poor choice of memes to tweet out. So we can touch on that because Tesla did fill the gap today. Until then, I'll see everybody else in the next few minutes. Thank you, Tesla Force. Thank you, Sterling. Thanking Bob. And what about me, Sterling? What about me? Bye for
Good
now,
guys.
everyone.